Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's drstoxx.com, and this is our beautiful old website. We're building a new website. Hired a firm to do that, and they're really working hard on that. But it'll probably be a few weeks before we launch that to the public. But just the URL will stay the same. You go to drstoxx.com, click the subscribe menu, scroll down to the live options room. That's where this is coming from today. And you can join me and a bunch of great traders at all levels of experience with options, some brand new, some well experienced, and everybody in between. And we mostly just do long calls and puts. So nothing too strenuous or too strange or too sophisticated. And we're not in these trades too long, maybe a couple of weeks at the most, 2 or 3 weeks at the most. And we're looking for good short term bursts of movement in the right direction. And if you want to join us, and watch me trade in live time, right? So you're going to get everything that I'm buying, my entry price, stop price, target price, reasons for the trade, chart, and I'll update the trade until I close it out. And then if you want to add on the live trading room, which is where we do stocks, ETFs, and micro E-minis, you can do that at a 40% discount. All right, so I want to jump over to Black Box Stocks first. Now, Black Box Stocks, ooh, look at all these Alpha Gold alerts. Black Box Stocks is a software that you can subscribe to. It's about $800 a year, so it's not like super cheap. There are cheaper services that do something similar, but it's the one I've been using for, I don't know, 5 or 6 years now. I'm familiar with it. I like it. It's got a lot of additional bells and whistles, which I never use. It's got a whole side of the software for stocks alone, not just options. But one of the things I really like about Black Box Stocks is that first of all, you can set your filters, right? So I only look at I'm going to scroll this down to 100,000. I only look at size option trades over $100,000 of volume. I search for stocks and ETFs, puts and calls, and I'm only looking at stocks trades that go off at the ask or above the ask. So I'm not looking at people that are trying to sell options for income or they're doing bullish credit spreads or bearish debit spreads. I'm not looking at that at all. I'm just looking at pretty much straightforward calls and puts. Okay, that's one reason why I like black box stocks. The other reason is over here on this right-hand side, the software has an algorithm that pulls out of the thousands of trades that go on throughout the day the most interesting by reason of unusual option level, unusual um, volume coming through, unusual dollar amount, unusual urgency. So if somebody's just going bang, 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 going at the same strike, same expiration, same stock ticker, one after the other, it triggers an alert. And those are the ones you want to focus on. And then when you get these little yellow alerts down here, alpha gold alerts, those are the most unusual of the most unusual alerts. And they're usually pretty good. Uh, you know, they trigger the alpha gold alert prior to sizable moves. Not every time, of course. And sometimes you got to have some patience, and sometimes the move doesn't even manifest at all. But we've noticed that when we get on board or follow the alpha gold alerts, more often than not, we get inside of at the beginning of a pretty good move. So I just wanted to see with the alpha gold alerts today. We had a lot of trading without any for quite a while, and then they started triggering as the market started coming off the lows. Oscar, I looked at this a little bit more carefully. I'm not interested in Oscar, but hey, if you want a higher risk junk stock, meme stock that could really bounce nicely because it's probably going to squeeze on all the shorts, then you could look at that one. I do like this one a lot better, APLD, which is a data center play. And then Tesla gets a lot of alpha gold alerts, so I'm not too interested in that one. I'm also still a little bit on the bearish side with Tesla. I know it's bouncing back a bit, but still a bit on the bearish side for next week or two. And we'll take a look at Intel here in just a minute, but it is interesting that got an alpha gold alert as well, because it kind of shot way up on the government investment and then came back down again and then shot up again on some news. So let's see where that one is today. I haven't been in Intel in a long time. So just wanted to see, I'm actually taking this time with my options room to do the kind of routine that I normally do in the morning, but this morning was so busy because of all the price movement, and we were jockeying around, right? We were, you know, so we got stopped out of a few things at the beginning, and then we kind of reloaded as the market started to move back. And I didn't have a chance to really get down into my charts and update them. So I want to do that now with you all. This is Trading View. I've got a number of indicators on here. This is the communications index for the exchange traded fund. You've got Facebook, Google, Netflix, Verizon, T-Mobile, and a bunch of other stocks in the communications sector in this ETF. And you can see it's a nice looking bullish wedge coming down with bullish divergence off of the most recent low that printed today. We've got a reversal candle on very good volume. You've got MACD starting to pinch below the zero line. That's a buy signal. It'll be a confirmed buy signal when we get across above the top of the histogram. We're not there yet. The cycles aren't quite where I would like them because the long-term cycle is starting to roll over here at the top. But that can be trumped by the other three cycles when they're rising together. You've got 2 out of 3. So the cycles aren't quite where we would like them, but I like everything else. It's kind of shaping up here. And for a bounce back, a kind of mean reversion trade back up here, but to about the 50-period moving average. But let's take a look at some of the other major indexes. Let's go to the S&P 500 as represented by SPY. And let's get in a little closer here. Okay, so we've got a wedge. Spiders have a wedgie. And we're getting a very similar kind of look today to what we got on Friday the 7th. Friday the 7th was the end of a 2-week slide off of all-time highs. We got below the 50-period moving average, closed back up at the end of the day above that average, closed on the highs, and everybody and their mother was out buying. You can see the big volume bar that day. And then we had a gap and go the next day, confirmation the day after that, and then we topped out. We topped out on Wednesday the 12th. Now, we came all the way back down again and set a lower low. All right, is that scary bearish? Could be, yes, but I don't think so. I think what's happening here is that we're getting an ABC correction, right? ABC, 3 waves down. We had a 5-wave up off of the April lows. We topped out on, what was that date again? Right at the end of October. And by the way, I'm not an Elliott wave theorist. I don't even really like the theory, but the ABC correction is a standard chart pattern that is worth noting when it happens. And when you see an ABC pull back in an uptrend, usually at the end of that C wave, that's the best time to get on board again to ride the next leg higher. And I think that's what we're doing. Now, there was a lot of talk yesterday when the S&P 500 closed below the 50-period moving average because it was the first close, below the moving average, below the 50, since the beginning of this big run off the April lows, right? That was the big Independence Day. Everybody and their mother's going to be paying tariffs anywhere from 15% to 50% or something like that. It was just really out of the blue. And the market absolutely panicked for about a week after that announcement. But it's been all upside from there because, we've been kind of figuring out that this is a negotiating tactic and Trump isn't really going to impose these tariffs long term, maybe a little bit of short term pain for some countries, but he's now, talking about a China deal, and he's been scaling back on India and scaling back on some of the products that are causing average American to panic a bit on the inflation. So, I think it's all moving in the right direction. It's just that the market got a little bit squirrely. Now, here's why it got squirrely, right? We had earnings from the big Mag 7. Not all of them. Nvidia reports on Wednesday this week, but everybody else, Apple, Amazon, Microsoft, Google, etc., they all came out and said, you know what, we're spending a lot more on getting our AI up to speed than we thought. We're increasing our CapEx. We're having to sell some bonds to pay for it. We're having to dilute our shares a bit to pay for it. And we're having to take out loans to pay for it. And the market kind of freaked out, right? And rightly so, because that hadn't been priced in. And so I do think, however, that the fear around that is overdone, as the market usually does, right? Fear is a much stronger emotion than greed. So the market tends to go down very fast because of that panic, and tends to go up very slow, right? It's an elevator down and stairs up, is the old saying. So I think we have um, sort of set the floor for that fear. There are still, however, some fears left that the market needs to deal with. One is jobs. Where are we at with jobs? We're apparently going to get data. We got jobless data out today, which is kind of unusual because it's usually on Thursday and today's Tuesday, but it was not real good. The numbers weren't real good. And I think we're going to get the ADP non-farm payrolls and unemployment rate on Thursday as well, 2 days from now. And that, coupled with Nvidia's earnings, um, could be great for the market, or could be a little bit of a shakeup again. So we're just going to take this one day at a time, as we always do. But right now, based on where we were this morning, way down there, and the fact that we've come all the way back up, and we're back inside of this falling wedge, that's a bullish hammer reversal so far. It could all reverse before the close. We still have 2 hours of trading, but we'll see. But I do think that tomorrow, possibly, if not Thursday after Nvidia, we should start to get a more consistent rally to the upside. This also coincides with the cycle indicator, not the ones you're seeing here, but the cycle indicator that a guy in my pro trading group uses that are proprietary to him. And we're in a trading group together. We share trading thoughts throughout the day, and he's saying that too, that we're within a day or two of a good, healthy, bullish reversal to the upside. Now he's calling that an intermediate turn, not a long-term turn. So it will probably be a month, maybe 6 weeks of some upside, and then another leg lower is how we probably will end the year. QQQ, we're back up to just under 600. We really need to see that number hold. We're at 599 and change. We got up above just a little bit ago, back down below right now, and this is printing something similar to what we just saw with the S&P. Falling wedge. And we are also below the 50 as of yesterday's close. But here's the thing. If you do studies on good, healthy trend, right, where you're up above the 50. So let's say that this line here is the 50. Oops, where did it go? I just hit the mouse. Hold on a minute. All right, let's say that this line is the 50, right? It's nice and upsloping because we're in a good, healthy uptrend, and price is mostly up above that 50. You know, it kind of comes down into near it and then back up and then near it back up. We're getting a series of higher highs, higher lows, and then we get a break like we did yesterday. What does that mean? Does that mean the trend has come to an end? No. Probably 80% of the time, you will get another leg higher. You'll get back up above the 50. You might even hit a new higher high as a result of getting back up above there. But what it does mean is that there is a little bit more fear in the market now and a little bit less momentum on the price side. So it's not the end of the trend, but it is a slowing of the trend. And I think that's kind of where we're at. What that also means too is that it will be a little bit more difficult and not as easy to make those really nice, consistent, big gains where, you know, you can just hold it for 5-6 days at a time without ever having to worry about it, and every day you're moving up your stop. We probably won't have that kind of a market going forward, but if we are very selective with our stocks, and if we give our lower the position size a little bit and give ourselves a little bit more room with the stop, we should be okay. So that's the QQQ, pretty much the same story as the S&P. Of course, there's no surprise there because they have the same stocks at the top. Here's the index that I'm most interested in, not necessarily in buying it or trading it, but just seeing it as a canary in the coal mine, the small cap index, the Russell. The Russell was the first of the major indexes to start falling, right? It was earlier in October, around the middle of October, we had a crack there, and then it was back up and right back down again, and has fallen the furthest. In fact, I think we're maybe down around 10%, which is a classic correction in the overall trend. But here we are, up 0.6% when the Nasdaq itself is down 0.6%, and the S&P 500 is half of that down. So it's leading the way higher today. That's a good sign. And if we see that carry through over the next few days, then we should see the rest of the market, especially the Nasdaq, the big tech index, start to catch a healthier bit. All right, so that's all I want to say about that. Let's take a quick look at futures contracts for the crypto play, because these guys have really been Bitcoin and Ether have been really cold, right? Really, really cold. Lots of outflows. So today is looking like a deep cut reversal. This is what I would call a dead cat bounce or a potential relief rally. A mean reversion trade. You can trade this if you want to. I'm not interested. I'm not long at all, except in some longer term positions of IBIT and ARQT, which are the two funds that I use to hold Bitcoin. But I don't think it's going to get much higher than 100,000, right? So here you are at 92.2. That would be a 6-7% move from current price. Come back up, test the underside of 100,000, and then I think your next cycle is going to be a leg lower. I was talking to a guy who is, he shorted Bitcoin quite early. It was in the middle of October. He shorted Bitcoin, and right around in here, we saw the big top. That was the all-time high. It started to come down. It failed below the 50 and kept dropping. It was somewhere in that area that he started shorting. His target for Bitcoin is 75,000. His target for Ether is 1,500, which is a good 50% lower where it is right now. So this is pretty much what he sees, and it's kind of the same thing I'm saying. I'm not a expert in either one of these assets, right? And I don't get into the the halving and the super cycles and things that people like to talk about with Bitcoin. For me, it's just about the chart. And what I'm seeing right here is a well-developed, consistent downtrend channel. You've got several tests of the lows. You've got several tests of the highs. And I have to say that I think the next move is going to be a week up into that resistance trend line, the RTL. And then your next stopping point on the way down is going to be where price meets that supporting channel line, supporting trend line, STL. That could be 75, right? That's exactly where that arrow is pointing, 75,000. Same is true for Ether. It's really the same setup, absolutely the same setup. You topped out right up there, and you've got a well-developed. I'm not sure where the supporting trend line should go. So the rule of thumb with putting in trend lines like this or channel lines is that you want them to pass through as many points of contact as possible, and try to get them parallel. When you have them parallel, you've got a channel. When they're diverging away from each other, you've got a megaphone. When they're converging toward each other, it's a triangle. But this to me looks exactly like a trend channel. And we did hit or came near the supporting trend line. We're reversing today. It's a pretty nice looking reversal, I have to say, although volume is not that great. But I really don't think it's going to get any further than the top of the channel, and then it's right back down again. So hey, if you want to play the long side of these, be my guest. But I don't think you're going to be. If you think this is the bottom, you could totally be right. I could totally be wrong. And my friend who's calling for 75,000 and 1,500 could also be very wrong. But I'm just telling you what the charts are saying. That's all. So we are short gold and kind of we shorted it up here. So we're in a pretty good place. We had a good carry through yesterday, and it got even further lower today. It's bouncing back a little bit on some safe haven stuff, but and also the odds of a Fed cut in December went up a little bit, not a lot. We're just over 50%, like 52%. So that's going to help gold as well. We've got our stops in place, and if we get stopped out, that's fine. I'm not worried, but because we're in a inverse fund for shorting gold, GLL. But yeah, I just think that this is some intraday back and fill on this new downtrend, and that we'll probably see a little bit lower over the next couple of weeks. I would say the same thing for silver, although I do think silver is a little bit more bullish here, actually, because it formed the double top. That's an ugly looking double top, and it had all kinds of bearish divergence. Look at that bearish divergence up there off the double top. And it's come back down into the 21. It's bouncing nicely off the 21, lower volume. You don't really want to see that. But I don't know. I would just, there are better setups out there. Let's focus on stocks and indexes that have lower. I wouldn't say this is a low risk, but it has, I wouldn't say this is a high risk trade at all, but there are setups out there where the risk to reward ratio is really good, really, really good. All right. So let's look at some of those. We are also short natural gas. We shorted it up here. It's been falling so far, a little bit of a light volume back and fill today. I think it's probably still going to go lower. And we're long oil, which is up nicely today. We just need to get up through this volume shelf. It's got some work to do, but I like what it's doing today. Okay, so let's take a look at, let's take a quick look at Nvidia, since it is reporting earnings on, it's reporting earnings in 48 hours time. No, sorry, less than 24 hours. No, a little bit more than 24 hours. So this is a Tuesday afternoon. It's going to report tomorrow night after the bell. And I have to say that this is the kind of good risk to reward setup that I'm looking for when I want to put my hard-earned money at risk in the market. So we had this ABC pullback, right, off the all-time highs, ABC pullback. We had the flush out low today, which took out a good 5 weeks of low prices, and a lot of stops, I'm sure, got taken out this morning. And then it's right back up again, and now we are back up into the pink zone of the uptrending LRC. And you know my mantra, buy the pink in an uptrend, sell the blue in a downtrend. So this would be a buy the pink moment. Of course, you're taking on risk when you hold anything over earnings, especially these days with the market ready to pounce on any hint at spending too much money on AI without at least justifying it and showing how you're going to pay for it. So that could be a hindrance for Nvidia. I have a feeling, we've seen so many really good stocks get hit hard on that very fact, but Nvidia is Nvidia, and Jensen is one of the greatest CEOs probably in history. He's very conservative. He knows how to handle a conference call, and I suspect Nvidia is going to be okay. In addition, it's already fallen, I don't know, a good 15% off the all-time high, so it's already discounted a lot of that. And all they really have to do is just not say anything too crazy. And of course, they need to beat on both top and bottom, and they need to raise targets for next year, but I think they'll probably do that easily. And then I think Nvidia will be okay. It may not just go skyrocketing higher on Thursday, but I don't think it's going to go lower. I could eat my words, but we'll see where that goes. We'll see. I think we'll see Nvidia higher by this time next week. All right, let's go to the greens list here, and then I'll leave it. I'll leave it at that. Okay, so Marvel is in an uptrend. It's all the way down to a volume shelf. It's hitting the top of the pink zone of the LRC. Not a buy here. We need to see a little bit more robust movement back to the upside. It's still falling, but it's on the list. We got knocked out of AMD in the options room this morning after that big low cut can't really see it very well, but it's all the way down here to about 223 and change. And it has come back up a little bit, but we're still not looking at a robust day for AMD. So it's still in wait mode. I'm looking for something that's ready to go. So CNC, I have it on my list because it got cracked on earnings and or whatever it was that was hindering UNH, right? And maybe it's also involved in some fraud. I don't know, but it is printing now this big cup and handle off the bottom. That's usually a very bullish sign that it's ready to start north again. It's not a horrible setup today. It's still above the 50, above the 21, and it looks like it's ready to take another test at 38.50. And then it's got this big gap here to fill in up above 50 and change. So keep an eye on that one. I'm not in it. Don't really have any interest in getting in it. I just have it on my list for, all right, this is a little bit better. This is a bit more robust, right? So you've got the falling wedge, and you've got some pretty good volume coming in. You've got a reversal bar today, 3 days of closing above the open when the market has been doing just the opposite. And of course, this is a Taiwanese company, so you're a little bit sheltered from what's going on here in the American market, a bit better than say Nvidia or AMD and so on. And I like what it's doing. It's not the most robust bullish chart out there, but it is in terms of risk and reward. You've got your stop down below 270, and your target up here is above 307, and that's a pretty nice looking move, right? WMB is a good looking energy play, not doing so well today, but it has moved nicely off the lows, and that is the operative, what we're looking to break. That right there, that pullback trend line. We're not there yet, but it has tested it 1, 2, 3, 4, almost 5 times in the last 5 trading days. And usually the more you knock on the door, the more likely it is to open up. Let me get a couple more here. So AMLX is a biotech company that I have my eyes on. I like the sector. We're long LABU over in the live trading room. It's been a great trade for us. It's our second go with LABU, and the first one was hit our target and then came back down. We got in again, and now it's moving in the right direction. So this one broke out yesterday. This is the rounded bottom breakout in a nice looking uptrend, right? Big breakout, good volume, lots of good call flow coming in yesterday, and it's holding near the top of that big green stick. Typically, I always say don't buy the big green stick because you're likely to get a better price the next day or two, which is exactly what happened today. We came back down about 40%. Traveling down from the top or from the close yesterday, came down about 40% to hit a nice fib retracement, and now it's right back up again, and it looks like it's maybe I'm going to go green before the day is done. VRT is a data center energy play. Nice looking hold here at the 50, green in a uptrending LRC in the pink zone, and that's the line that you would want to see break if you really want to do this on a technical basis. But I like the company. I know the fundamentals are very good, and I do think that with all the fear around data centers and profitability and all of that, which is likely overbaked, this is a good place to start getting long. And the other one I would like is CEG, same kind of play, energy play on data centers, and not quite the rounded bottom that I would like to see, but it's kind of that. But look how we are. We're green today. We're well above yesterday's close. Yesterday was actually in a bad market. Yesterday was also a green day. The day before was also a green day. So yeah, we're seeing some good inflows into this one against everything else that's been falling in the last few days, and that's always a good sign. TEM is a med tech play. Kathy Wood loves this one. She's been out buying almost every day since this big fall. And I don't know. I don't really like this setup very much, in part because it had no follow through on that hammer candle right there, which it should have. And we've been struggling even at the 200 period moving average. So I'm going to take this one off my list. And the last one I'll show you is this one. We're long this one in the live trading room, and it is just doing great for us. Really, really nice. So this is another biotech. Really like the biotech space. I'm not sure how much more big upside there is in these speculative plays in the biotech space, but I like what this one is doing. So we bought right at that near the top of that big green stick. Had follow through yesterday, follow through today. I don't know where this is going to stop, but it's getting. Well, I think our target is 30, so we'll just keep moving up the stop and see where that one goes. But this one is in a really good place, really good movement there on good volume too. And then lastly, Iran. I don't think it's a buy just yet. This I have long-term shares of this one, and it's a great. It is a great stock for swing trading, but this whole space, along with anything related to this, is the Iran is a former Bitcoin miner turned into quantum computing group. I don't know what they're producing the space that the big companies need to do the quantum computing. They have all those servers they use for Bitcoin, and they just kind of transform them to produce the cloud or the capacity, the quantum energy space. I don't know what you call it for that new form of tech. And it is an early mover in that space, and I think probably the best play on that. I mean, there are some bigger guys doing the same thing, but I think for a smaller pure play, this is the one I like. I don't really like this bottom so much. It's just kind of floating up a little bit, but I like what it's doing today, and it is starting to break out. Well, I'm not even sure. I think the line is right there, so I think it already has broken out. Yeah. So, but the other thing I don't like about this setup is that this has the potential of just being a bear flag, right? Long, sharp down, and it's not an ABC. So this could just be the A wave down, C wave soft, not very strong, not huge volume, giving us a bear flag, and then another leg lower. So beware of that. It's not a buy. I wouldn't recommend it here. And I had a half a thought of adding to my long-term position because I got in the mid 40s, and it's now around 49. But I have a feeling I might be able to get in a little bit cheaper. So, all right, guys, I'm going to let you go. Oh, let me take a look here. If you do have some chart requests, you can go ahead and type those into the main room of the options room, and I'll take a look. So let's take a look at COR. Yeah, okay. Well, I don't know the company very well. I recognize a ticker symbol as being on the sometimes on the IBD leaderboard and the IBD top 50. But yeah, this is a beauty. This is actually, I'm going to put this on my greens list, which I didn't know about. That's why I like to do these things with members of the room, because you guys often get me aware of stocks that are good that I didn't even have on my radar at all. And I like this one a lot. Let me just see what this guy does. What is Cencora? Let's go to FinViz. Hopefully it's up today. There it is. Medical distribution. Okay, don't know what that entails exactly, but it is profitable. It's got a low price to sales. That's good for a company like this. Return on equity. This number right here is worth paying attention to. When you have a very strong return on equity, that means you've got a very conservative management, good fiscal responsibility, good sense of how to make a profit from the equity that you have in the company, and 129% is huge. I mean, that's really huge. So this must be a very well managed company. I like that. I like that a lot. Recommendation from all analysts is under 2. That's good. That's bullish. And big target price of 389. That's not huge above where it is right now, but this is not a real fast moving stock. Yeah, I like this. So it certainly is a hold if you're already long. If you're not, I think you could buy it up here and maybe look at like 390 to 400 as your ultimate target. This is beautiful right here, where it just kind of goes up almost every day, and it's not much of a dip, and you can just slowly move your stop up along, and you don't have to worry about it unless you sleep at night. And then it goes into a nice sideways consolidation on earnings, right? Popped up on earnings, sideways consolidation. Perfect. Just perfect. Really. That's a great looking chart. Memorize that chart, and if you see anything more like that, let me know. Okay, we have a few others here. Let's take a look at CLS real quick. Celestica. So this one is not the easiest stock to trade, right? Big slide down, big green stick up. Follow through, back down again. So this is it's got a small float that tends to carry a pretty heavy short position. It's a big moving stock, high beta stock, which can make it kind of dangerous. And if you're going to trade this one at all, you need to really give it a lot of room. However, I think this is a pretty good setup. So why is that? All-time highs up here, rolled over A, B, C, pullback to the test of 50 period moving average, bounced very strongly in a not very strong market. And the pullback yesterday was minimal and a little bit lower today, but not by much, not compared to the S&P or the QQQ. So it is outperforming. And yeah, I kind of like this. I don't really want to trade it because I don't need any more, don't need any more risk in my portfolio these days, but I'm just going to put that on the greens list in case we want to do something else with that. Maybe we do some calls on that one just to keep our risk to an equal level. What do you call that? All right, so Facebook is a request. I'll just do one stock per person. I was looking a little bit better today. We got knocked out of METU, some calls this morning right off the bat. Of course, way deep cut low. It's the lowest low since May. So yeah, it's really way down there. And unfortunately, it has fallen hard on earnings and hasn't recovered. So, you know, you can't, because it's Facebook, because it's one of the big mags, because it's, it has to be bought by funds who are trading the NASDAQ or the blue chip techs or any tech fund that has to buy Facebook. It can't get too far away from its average mean. And so because we're way below the 200 and we're way, way below the 50, we can expect a mean reversion trade to start to manifest. And maybe today is the first day of that. I don't know. I still have a few of some META calls that I had from a trade way back. I've been holding them since, I don't know when, I don't exactly know when I bought them. They're way underwater. But I still am somewhat hopeful that I'll get at least some of that money back because I do think it's setting up for a mean reversion trade. However, I'm not so sure I would be a buyer. Let's drill down to the 2-hour chart, which is right here. So as a rule of thumb, when a stock is in a prolonged downtrend like this, you want it, and you're going to see lower highs and lower lows in that downtrend. As a rule of thumb, what you want to look for to mark the bottom of that downtrend is a higher low that then takes out the most recent pivot high, right? The most recent, oh, come on. You want to see a higher low that bounces back up and takes out the most recent pivot high. You can buy that higher low, and you can also buy the breakout, or you can buy a little bit at each point. So what we're seeing here, I'm not sure that I've got this exactly right, but we are seeing lower lows, right? Lower highs, lower lows, lower highs. We don't yet have a higher low. So I would wait on Facebook until we get that higher low. Okay. CAH, MCK, and Core all looking good in that space. Let's just take a quick look at those guys. So 2 of these are in my momentum letter this week. That looks good. That's Cardinal Health, and then McKesson. Yeah, also good. So yeah, 2 out of the 3 that you mentioned are in my momentum letter this week, and they look really good. All right, lastly, we'll do Qualcomm since there is a request. I've been out of Qualcomm for a while. I really thought, we did play it over in the other room with QCML, I really thought that this getting back up to this supporting trend line and somewhere in this area we bought and then got stopped out, of course, on that big red bar that was yesterday. I don't think we were in yet yesterday, though. I'm kind of struggling to remember exactly when we bought it, exactly when we cut out, but we're not in Qualcomm now. We do have, however, long-term shares of Qualcomm in our wealth building portfolio in the other room. And that one's well above the entry price because we bought that quite a while ago. What's going on here? So I kind of like what's happening. We've got the reversal bar hammer candle down in the pink zone of an uptrending LRC. That's the mantra by the pink in an uptrend. It is printing. If we look, kind of going forward, it's printing a series of higher highs and higher lows. All of that looks good. That's a good looking uptrend. Now we've got the cycles, the long-term cycle starting to roll over here. That's not necessarily a deal killer, but you want to see the other three start to rally higher together. This yellow one, which is the intermediate cycle, is not quite there yet. So it might take a couple of days to see that cycle uh, uh, rally back up. And sometimes when you get these when you get the long-term trend, the long-term cycle rather rolling over from the top, it can kind of go flat for a while and allow the stock to keep moving higher. And that may happen in this case. Like it went hit flat right here, right? So it got up to near the top and then it just went flat while the stock was going up. So that sometimes happens with the cycles. And I'm really new to the cycle indicator anyway. Yeah, I would say you can nibble on Qualcomm right here. And of course, it is Qualcomm, Avgo, and Nvidia, in my mind, are the three big semiconductor plays, fabulous plays, and always good to keep an eye on what these guys are doing, and also good to have some shares in your long-term portfolio of all three. All right, guys, I'm going to let you go. I'll produce the video, put a link in the main room. We'll get back to trading, and I did go a little bit over my time. I apologize for that, but we've got plenty of time now to see if we need to add anything else. God bless. See you back in the room in just a little bit. Bye for now.